Hey traders, John Howell here. So yesterday I did a video. Man, you guys are tough sometimes, aren't you? I do a video and I explain some things technically, the reason why I'm seeing some things and why we should start to see a bit more of a pullback and a bit more of a selling movement. And today I actually had a nice follow through. But guys, I believe what we're seeing in the stock market, it's just starting. It's not the end. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's video. Nasdaq guys and S&P 500 and the Dow are starting to see a lot of weakness here. We are starting to roll over. And yesterday's video I was talking about some technicals. And guys, don't shoot the messenger. I'm not the don't shoot the messenger. I'm just the messenger, all right? I'm just reading the markets. And remember, the market is like a woman. She may be doing well today, but tomorrow things can things can change really, really quickly. So if you're a short-term trader, you must adapt to her moods, right? But always, and I was talking to this about with my private clients today, always be patient and patient and patient. Not impatient, patient with her mood swings as the markets, right? So today we had a down day, tomorrow could be an up day, then the next day, then we might see Black Monday or Black Friday or whatever, you know, we just never know. So to me guys, looking at where we are right now in the overall picture, the Nasdaq had the tech bubble, big bubble up. And in fact, if I bring up actually this chart here, this right now, what you're looking at is the three main indices, the Dow Jones, the S&P 500, and the Nasdaq. And I always look at this when I'm trying to get a big view of where things are, especially when I'm trying to invest into something as well too. I'm trying to see where the big picture is. Now, if I'm just investing in the markets, then that's what I'm doing here. But guys, if I'm trading the markets, I'm just looking for patterns that I believe in. If you go to John's, JOHNS free training, or there should be a link in the description or that first comment there, just go click on that, go register for my free training, and I'll share with you exactly how I trade the markets and my patterns that I use, and also what goes into a good trader as well too. So, but if I'm not trade the markets, again, if you go to johnsfreetraining.com, if I'm not trading, I'm investing, and I'm always looking at the big picture here. So if I'm looking at the Dow Jones, we have the Dow Jones here. The S&P 500 is to the middle. And then you'll notice that the Nasdaq is to the left. Now you'll notice one thing about the Nasdaq weekly charts. Now down the bottom here, guys, just so you know, the top here is the daily for all these markets. Daily, and daily. And this one here is the weekly, and also weekly, right? So we've got the daily and weekly for the Dow Jones, daily and weekly for the S&P, daily and weekly for the Nasdaq. And you'll notice the big picture here when I'm looking at the Nasdaq is that we have just gone through a rocket ship to the upside, just a massive rocket ship to the upside. And the market's starting to get a little bit wobbly. So it just, to me, makes sense of why we could see a bit of a pullback, even down towards a 50% of this retracement, down to say 10, 11,000. That'll actually be a nice, healthy thing. If we are going to then see a continuation moving forward after that, you'd actually want to see that if you're in the role of the market. You wouldn't want to see this thing keep doing something like that. Because what happens eventually, this is like when Bitcoin went to 19, 20,000, right? What happened? We went down to 3. So you don't ever want the market to keep going up like that. You want the market to have a bit of a stabilize, and that's what's going on right now. We're stabilizing a bit. We're just neutralizing things a lot more as well too. So to me, guys, as I was saying in yesterday's video, that I believe we're now starting to see a significant selling mood in the markets, especially with the Nasdaq, the tech stocks. We're starting to see some severe pullbacks in there. And if I go look at my weekly charts, if I bring up my weekly charts here, you'll be able to see on the Nasdaq that I talked about this in yesterday's video, but it's something really, really important. Whenever we want to buy low or buy at a good price and sell high, right? We never want to buy high. Now, what is high? If you look at any stock, you'll notice that high is, if you bring up a weekly chart or even a daily chart for that matter, you'll notice that the market gets a certain distance away from the 52 before it starts to become frothy. A certain distance away from the 52, and same for down and up, right? As soon as we start to get too far away from the 52, it's like, oh, I think it's a bit too far away from it. All right. And then also from the downside, and now you can see where we're at right now. We've actually, this is the maximum it's been. The maximum it's been away from the 52 moving average. So it's been so overstretched in a long, long time. If I bring up my whole chart, you can see that it hasn't been that. It hasn't been, it's never been this overbought in a long, long, long time. So a nice healthy correction down to 11,000 or somewhere in there is going to be, again, nice healthy thing. You'll want to see that in this big overall, just massive shoot to the upside. And then a pullback is likely to continue on the downside. And so, and looking at that, guys, you can see what, let's do this here. So you can see how this is now developing this rounding top formation, and we're starting to get a lot of volume through today as well too. So you can see how we've got this left shoulder. Yesterday I said this is a right shoulder. Some of you guys picked that up in the comment box. Left shoulder, head, and then we've got like a little bit of a right shoulder, and now we're actually starting to roll over and roll down. So we're not going to go down, well, we may, but we're probably not going to go down like every single day. We're probably going to do something like this. You know, and then maybe start to pick back up again. So, but I see at least a 50% correction across these markets. To me, when I look at the Nasdaq, this is the up close and personal of the Nasdaq. Looking at the 20 moving average now, you can see how we're actually making higher lows, all the way up above the 20 moving average. And now look what's happened. We actually made a final high around the 14,000, and then we dropped down. We've now rallied up, and now we're rolling back down again. And especially now, to me, the line in the sand, if you remember, I've been doing videos now for the last week saying the line in the sand for me was 13,000 on the Nasdaq. And now we actually clearly broke that. And so now we're in a bit of a downward trend on the Nasdaq. And I see a lot more downside to come to neutralize this massive bubble that we're in on that big picture I just shared with you. If we look at the S&P 500, the S&P 500 actually came down towards this line in the sand, which is not exactly, but almost down towards the line of sand. And then we had a bit of a rejection point here, but we almost did that. I would expect to see over the next few weeks, or over the next few days, for it to actually probably break that and continue down, maybe even down to around this, down where this support line level is. But I expect to see a bit more of a drop on the downside when it comes to the S&P 500, because we almost got there as well too. Now, the outlier, if you're going to call that the outlier, or the one that the market that's actually still holding quite strong, is the Dow Jones. Now, I think that's because of the bank sector. The banking sector has been very, very strong in these markets. It's still very, very strong. Now, they're starting to get very, very overheated as well too. And so I expect some sort of sharp pullback out of those as well. And what I'm talking about, let me actually just bring up this chart here for a minute. If I bring up, say, Goldman Sachs, looking at the weekly charts, or even if I look at the daily charts, look at this here. Look how long we've been going in this upward movement here. Very just massively movement, to the upside when we're looking at this. If we look at, say, JP Morgan as well too, we've just been going up for quite some time. We had a bit of a pullback, and now we're going for a bit of a rally again. So I wouldn't be too surprised if we started to see a lot of these, even like Bank of America as well too, same sort of thing. We're actually gone through a big move up. So I wouldn't be too quite surprised to see these markets pull back on us. So if I go to the Dow Jones, that may be the thing that's actually keeping, it probably is the thing that's keeping the Dow Jones still quite strong where we are right now. So so we're still making a low. We still could be creating a high low here on the Dow Jones. So tech sector, which was the boom last year when things just went absolutely nuts with that tech sector, seems to be now topping out, and we now seem to be having a big pullback when it comes to those sort of things, and those sort of things coming in the markets. Bit of an update, guys, on the cryptocurrency market as well too. We can see how that looking at Bitcoin, if Bitcoin right now, guys, continues to roll over, this is going to create a lower high in the markets, and we're probably likely then start to see something like that coming into it. Same with Ethereum as well too. The exact same thing with Ethereum. We're actually pushing up, and now we could be just rolling over. As you can see, we clearly broke this upward trend. Now we could be rolling over to see a lot more downside movement out of those markets. And and if we have a look at things like even like gold and silver as well too, gold right now is continuing to sell off. We didn't get the false breakout scenario here. We are continuing to sell off. So if the market does continue to sell off the stock market, it's probably going to drag gold and silver down with it as well too. So it seems like there's going to be a lot more weakness coming into gold. Guys, I'm bullish gold long term, but these short term movements, I just have to go with what I'm saying. I've been doing whatever I can to try to find bullish movements out, right? Bullish setups or bullish things out of these markets. But right now, I cannot be going with a bullish movement out of gold until we actually start to get back above the 1800 level. Once we get back above the 1800 level, then it's probably game on for the bulls. And silver's actually starting to slightly have a bit of a drop to the downside. So I wouldn't be too surprised, guys, to see a bit of a deflationary period across stock market, across cryptocurrencies, and also across silver and gold as well too. So to me, guys, it's just starting. This deflationary period is actually just starting, and it's not ending. So I hope this helped you out today, guys. Make sure you hit the like button, leave a comment below, let me know what you think about what's going on right now. For me personally, guys, I'm loving this market. I'm absolutely loving this market. I love trading this market, and I love trading also. If you like to learn, guys, how I trade the market, then that very first link in the description, or just go to johnsfreetraining.com, JOHNS freetraining.com, and from there you can actually then see how I trade the markets, my trading system, so you can start to utilize it in your trading today. Talk to you guys soon.